In the United States, we do have a couple of very interesting things happening here within the next 2 weeks. We've talked about this at nauseum, and you and I are pretty much consensus, and I think even more so now that we've seen this price action to the up angle, that these FOMC meetings next week on Tuesday and Wednesday, November the 1st and 2nd, where the Fed plans to meet again. And the last time we talked, you said that you think we're only going to get a 50-point rate hike. I'm actually warming a little bit more to that. The more that I have kind of heard sentiment, with the pleading of other countries in the world, the Fed themselves, I forget who it was specifically, but kind of floating out there that they think maybe they are causing more ill intent than they meant to with all of these hikes. 75 is definitely priced in, I think. They've been expecting 75. Everybody has been expecting 75. If we get 50, this pump that we have just seen the last few days, which I think will probably hang around these prices until, maybe dip a little bit going into the FOMC next week. But if we only get 50, we're going to see more pump after next Wednesday. I can almost assure you that. So do you still feel that way?
Yeah, I think so too. I mean, like you said, things are priced in a lot. And if they've priced in 75 and we only get 50, well, it's got to probably make it up somewhere. So I think you will see a little bit of a pump, some more excitement, some, it'll be taken as good news that we may be out of this whole, upward swing of these rates. So, but yeah, I'm still set on 50, and I think it will be met with some bullish sentiment as well.
Yeah, it definitely will. I mean, I could see us pumping up. I think people forget how often bear market rallies can happen and just how severe they can be. I was watching our friend, not real friend, but a guy we both like, Crypto Kirby on YouTube today. He's actually, after being pretty dormant over the last couple of months because nothing's been happening, right. He's had 3 videos in the last week. And, he was talking about the possibility that, while this seems doubtful, I mean, you could see BTC go to the high 20s. You could see a 28K and still be in the bear market and still see new lows. It would just kind of push out the time frame of it a little bit further. But there is that possibility. Now, I don't think that will happen. I would think more like maybe we could revisit that 24 to 25 range that we saw kind of towards the middle and end of the summer. But people should realize that just because we see prices that we haven't seen for 6 months nearly does not mean that we're out of the trend. And I think a lot of people that are even smart people are going to be baited into that.
Yep.
I mean, just today, and we're guilty of it too, because we want viewers, but people everywhere are like, it's just the end of the bear market,
Well, nothing wrong with a little clickbait.
No.
I will strongly warn against, we have not that many viewers, but for the ones listening, please don't place long if you start to see it go up, because yes, this is not over. And it will get people liquidated again, because they'll think it is, and they'll place a long thinking that was the bottom, and here we go. And next thing you know, liquidations happen, and then we reach more, lower lows. So just be careful. Use your judgment. It's not over yet. So.
Yeah, I think we're at the point now that we've seen this pump, that even if we do get the priced in 75 basis points, I think we're basically pumping after FOMC again, no matter what. Like I said, I think that there could be a dip heading into it, because that something like that traditionally does happen. But yeah, anything outside of 100, which seems about not a high probability of happening, I think we continue to see pump. But that doesn't change. And this is what we've continued to say over and over again. And it's happened over and over again because it takes time for these things to pan out. But I don't think we have really seen the real world effects yet on what some of these rate hikes and with some of these larger economical decisions, the effects that it's actually going to have on the economy. I don't think we've seen that. We haven't really seen massive amounts of people losing jobs or anything yet. We think probably after the midterms, regardless of the results, even though we're going to get into that in a minute, I think we both feel the results are going to be fairly one-sided. But I don't think we hear the R word, recession, if we do hear it at all, until after then, of course.
Yeah.
But to me, it's just like, I still believe that the most pain, and maybe it won't be as low as everybody has previously thought, but I still think the most pain is still ahead um, around the holidays. And yeah, I mean, you can criticize me or anybody else left and right for saying, well, you were saying like early November before it. Now you're the holidays. Now you're saying towards Christmas. Well, when you have new data, you reassess a little bit,
Yeah, you
and
have to pivot.
right. So, and it's not a huge pivot, but I do think that we said a couple of weeks ago, I loved this thesis that we agreed on, that we thought maybe towards like Thanksgiving time after the midterms, we could possibly see the new lows or the start of the new lows. And yeah, a good month there between Thanksgiving and Christmas. It'd be an interesting time frame.
Well, and who knows what happens with the primaries, with the elections? It could go completely opposite of what we think, which could cause fear. It could happen much quicker, than we anticipate because of the way things turn out. So it's hard to say. Again, if we only had that crystal ball, we'd
Mhm.
tell you a little bit better. But I agree. I think closer to Thanksgiving, we should see the movement in one direction or another to see which way we're headed, and you'll get a much more clear picture, I think, around then.
Yeah.
So it's just my anticipated, timing on it.
Well, there's going to be a lot of things kind of geopolitically that could shake it up here. I mean, first off, like I said, the FOMC again, if we get 50, that not only will be lower than what's priced in, but I think that it will also signal that we're not going to see much more of this, the rate hikes.
Well, I hope so.
Yeah, which would lead to a lot of short-term bullish sentiment.
Yeah.
And then in the midterms, what I was alluding to, that we and I think the majority of anybody that has their eyes open in America thinks that Republicans are going to, I don't know about overwhelmingly, but I think they're going to do well in these midterms just because people, not to get overly political, but chances are if you're watching this, you side a little bit more in the middle or the right when it comes to economical policy.
Yeah.
But yeah, and I would think that would be possibly continued bullishness. Maybe I'm just overrating that or assigning too much reason to it. But I would think that if there is this theoretical red wave, as everybody likes to say, that would be liked by
Well,
most financial people.
I agree. But what I was saying is, if somehow the Democrats pull it out, I think that could be very bearish. That's where I
Oh, yeah.
was going with what
Yes.
I was saying. So, but
No,
I
I
agree
know.
with you. I agree with what the sentiment is, and what we think is going to happen. But yeah, who knows?
Yeah. What would that look like to you? Because, like, frankly, I'm not paying enough attention to the scope of all 50 states or anything like that. But what do you think that would look like if the Democrats did surprisingly do well? Um, I don't know. Like, what do you think the reaction would be like? Because I don't think really anybody that's paying attention is expecting that.
I don't
Um,
either. I don't think it will be met with much positivity at all. You
yeah.
know, I I think if that does happen, it's going to pave a way for a completely different 2024 election. I
Oh,
think people are going to wake up and see what's really happening, and it's not good. It's not
yeah. The
good. And
hammer
like you
might be put
said,
down.
yeah, I think the hammer will be put down. But we still haven't seen, like you said, the long term effects of the rates increasing. It takes a long time for that stuff to play out and reach the broader markets as far as jobs go, as far as the economy, the housing markets. It takes a lot longer than just a few months for it to play out, and they think it's going to fix it right away. I think it was too aggressive, too quick. Um, I think it's gonna cause a lot of bad things to happen. Food shortages, fuel prices. There's going to be a lot more. The transportation industry could get crippled, which means your goods and services, the things that you buy daily, you're not going to be there. So it's going to get ugly, I think, if they continue to keep this up.
Yeah, yeah. There's certainly going to be ripple effects. You do start to see, we are seeing a sentiment though that it seems like they are going to be backing off the aggressive rate hikes. Um, Again, already hearing people saying that they don't want to cause more damage than they meant to. So yeah, I could see it being eased off, and if we get 50 here or even 75, again, 50 would really sound the alarm that they're backing off. But the next one isn't going to be until January, and who knows? They may quit by then. They may not even be doing them anymore by then. So, uh, very interesting quarter four here.